Both will be there. 40% theory, 60% practical. I think it is too early to discuss all those things. But anyway, since you raised, the answer is 30, 40, 60. Okay. 30, 40 to 60, 70, like that. 30 to 40% theory, 60 to 70% numericals. Okay. Yeah. No. First, one second. We get less time in week. 1 week consists of 7 days. Per day consists of 24 hours. That's it. It's for everybody. Universal truth. Effective time for your preparation you're talking about. Okay. That you have to make it up. Okay. Yes. That's what we are going to have now. That agreement. Whatever is there in LMS, thank you for raising that. Whatever is there in that, from that only we can take to test you. That we can have. Yeah, sufficient. Okay, that's what we can have in this semester. Previously, I had a little bit of different model, but now I have just changed all the materials in the LMS, newly uploaded. We just to follow that. We get tested only on that. That makes little framework for us. Okay. All right. These are the not questions I expect. I was asking about the questions which is discussed in the class before. Of course, this also need to be clarified. Last week we had discussed certain things. No, in that, on that, out of that, if you have any queries to make or anything to say or anything to ask, just for 2-3 minutes. Those are online. Any queries on the previous class? We have discussed very few concepts, the framework of the subject. Okay. Anything else? No? Then I have questions to ask to test whether you understood or not. 6 words we were talking about, right? 6 terminologies we are talking about. I already these words are going to be manipulated. I mean, influenced, impacted because of whatever taking place in the business organization. Before that, I told so many framework of the business and type of business and all those things. With respect to accounting, I told you there are some terminologies. What are those terminologies? Those are online. Can you tell me? Anybody from online? Can you just recollect those terminologies what we discussed in the last class? Yes. Am I audible to the online people? Yeah. Anybody from online? Can you please respond? Nobody is online? Excuse me.
The balance sheet, the profit and loss account, the ledgers.
Okay. So these are all the various terminologies you learned from the class. But I told you some of the terminologies which are always important. Every transaction that take place in the business organization revolve around only those terminologies. Basic framework. Equation that forms the accounting equation. Can you recollect?
Equity, liability, and assets. Equity, liability, and assets.
Income, expenditure, profit or loss. Equity, liabilities, assets. Only these 6 terms, profit or loss together. Okay. If you take in that way, only these 6 terms which are going to be there always in the accounting. That form the accounting equation also. What is the accounting equation? 2 equations we studied. Okay, assets are always equal to equity plus liability. Assets are always equal to equity plus liability. In this case, what is asset? Anybody can tell me what do you mean by asset? Again, you are making me to explain the concept. Huh? If I'm asking you one thing, you are telling the opposite thing. Capital is not an asset. Capital is a liability. But we don't call capital in this equation. Anyway, we have capital. No. What is there? Equity is there. Equity includes capital. Equity includes
Sure.
capital. Yeah. Yes, madam.
The bank cash balance, the fixed assets and the
Madam, your voice is little not comfortable for. Please speed. Yeah. Tell me. Yeah. Yes, madam.
the cash balance, fixed assets,
Cash balance. Okay. It's an example for asset. Okay. Simple words to define assets. Example, we can take it later. First, we should know what it is. Then only we can categorize, is it asset or not. What is asset?
owned by
These are all examples now. What do you mean by asset?
something which
How
the
do you define asset? Yes, madam. Something?
something which the company owns.
That's it. Simple. Something that the company, that the business owns. That's it. That's asset. Owns. And has some monetary value. And has some monetary value. That's called asset. What is owned by the business is asset. Simple. Simple logic. Then whatever you told is correct asset. Cash. Cash in hand. Then now when we're talking about individual object, individual thing, you come with individual thing. That is a classification of asset again. No. When we come across the micro level of the name of the asset, the very micro level. Okay. Furniture, machines. Infrastructure is a very bigger term, no? You don't include furniture into infrastructure. Infrastructure includes furniture. So when we say individually, you just list out individually. Cash in hand, cash at the bank, machinery, furniture, buildings. Then land, vehicles, computers, equipments. Then sorry, plant and machinery. Okay. Then scrap. Okay.
Goods in stock.
Goods in stock. Okay. Good. Sorry, sir. Goods in stock that madam told. What do you mean by services? Services is an asset? Nothing. It's not an asset. Okay. Yeah, copyright. Copyright is an asset. Patent is an asset. Goodwill is an asset. What is it? Trademark is an asset. Softwares. Yeah. Anything else? Raw materials, stock in trade. That madam was telling, stock in trade. Okay, there are two type of companies we already discussed. Two type of businesses. One is buying and selling just. Another one is manufacturing. In manufacturing, stock in, inventory includes raw material, stock in process. Work in progress, finished goods. Simply inventory. Inventory is an asset. If you go into inventory, then we have three kind of inventories: raw material, work in progress, finished goods. This is for manufacturing companies. If it's a trading company, if it's a merchandising company, they won't have these three kind of inventories. They have only one inventory, that is stock in trade. Stock. Okay. What they bought, what they sold, the difference between these two will be stock in trade. I bought 100 water bottles, I sold 90. So 10 water bottle is in stock, that is in trade. Okay. Value of the 10 water bottles is equal to closing stock of the stock in trade. Okay, then let's go into that little detail later. Now understand assets. Okay, so assets plus equity. Sorry, asset is equal to equity plus liability. What is equity? I told you. Owner's own money. Okay, little more better way of defining. Something you told. That's what I told you in the last class. I prefer to say like that. Owners claim in the business. What do you mean by owners claim in the business? How much owner invested in the business? Locally, you call it as capital or just investment. Investment. How much that investment has grown, or how much that investment has come down, whatever the way it may be. The owner's claim in the business, any given point in time, the book value of owner's claim in the business. Book value. I have given you 1 lakh rupee. The business has been run for 1 year. What happened to that 1 lakh rupee? Sir, 1 lakh rupee has become 1,10,000. So the equity is 1,10,000 on that particular day. Or it can be otherwise called as, equity can be otherwise called as, we used one word in the last class, net worth. The worth of the business may be 1 crore, but net worth means how much that business means to the owner, how much that business gives back to the owner if the business is closed on that particular day, hypothetically. That's called net worth, or you can call it as equity. Okay, right. Or internal liability. Internal liability. Business owes to owner. How much the business owes to owners on a given point in time is called as owner's claim, equity, net worth, internal liability. Very good. So these are the terms. So in this equation, we are trying to identify the financial position of the company, financial position of the business organization. Yeah. Now, equity, see, that's a liability. The equation you see in last class, no? Resources are always equal to, first equation I was telling you in the PPT. Resources are always equal to claims. Claims means liability. In accounting term, claims means liability. Resources mean accounting term assets. So assets should always be equal to liability. That liability we are categorizing into two, classifying into two: internal liability, external liability. Okay, external liability we just call it as liability. Internal liability we call it as equity. In that manner, assets are always equal to liability plus equity. You got it? Suppose my business is started by investing 1 lakh rupee by my own, and 50,000 rupees I taken loan from my friend. The total money invested in the business is how much? 1,50,000. Out of this 1,50,000, what is the owner's claim in the business as of today? 1 lakh. The remaining 50,000 is to be claimed by my friend. Okay, in accounting, he will be called as creditor, financier. Creditor is a creditor. Liability in total is coming under the term umbrella of liability. Okay, that to external liability, that to creditors. Liability may include so many components. For accounting purpose, we categorize some of the, we will name some of the name for each and every account. Okay, here it is creditor. He is called creditor. Clear? So this equation is to be prepared in a statement. That statement is called as balance sheet. Balance sheet. Okay. Another equation is income minus expenditure is equal to profit or loss. Okay, this one we discussed. Okay, just recollect. We'll go to the next concept today. Any doubt before we start again? Anybody has any doubt? Is the slide visible for those who are online?
Yes, sir.
Yes, sir.
Okay. Okay. Look at this slide. There is a pictorial representation. Look at this. The procedure of accounting. First, we have to identify the business transactions. I already told you the last class. We are identifying the business transactions through some of the documents. If you paid money, if the business pays money, what is the evidence for that? What is the source of information for that particular data? Sorry? A cash book is the record now. How do I know to write how much amount paid? Voucher will be there, receipt, invoice, okay, check. All these things are helping us to identify what transaction took place in the business. Okay, after identifying the transactions, I'll just record it in the books of accounts. Where I will record? Books of accounts. Okay, what are the books of accounts we have? Last class we discussed journal or subsidiary books. Journal or subsidiary books. That's called books of accounts. Recording will take place in books of accounts. Okay. What are the books of accounts? Journal or subsidiary books. Journal or subsidiary books. All right. Clear. Next, after doing that recording, either in journal or in subsidiary books, depending upon the policy of the company, we go to the next stage that is called classifying of transactions. What is classifying? In journal, we are writing everything together. One after another, we are writing. One after another. Chronological order. Date wise. We don't know how much rent paid for this particular year from journal. From the recording, we can't identify. So we have to classify. We have to group the similar nature of transactions into one group. Okay. Rent paid, cash, salary paid, purchase of raw material, commission, interest. Likewise, you have to classify. That is taking place in ledger. That is taking place in ledger. That's classifying. Summarizing also takes place in ledger. Totaling of that. Rent might have been paid in several point in time in a year. Okay. All those things are brought into one group called rent account in ledger. And finally, we are totaling the ledger account of rent. That gives me the summary of rent paid. Okay. After this, we are preparing trial balance. The other day I was showing you the chart, right? Trial balance we are preparing. After preparing trial balance, if you come to know the accounts are correct in arithmetic, all aspects, then you are going to prepare the financial statement. What are the financial statement? I told you profit and loss account, balance sheet. After preparing that, we are going to analyze. Okay, and give some interpretation on the data which is analyzed by us. So what is the source for analyzing the financial data? Where you can get the financial data? Only from two places, only from two statements. What are they? Profit and loss account and balance sheet. Where you can find these two? Annual report of the company. Annual report of the listed companies. We discussed about all these things, business model and then company type and everything. Okay. So now we are talking about only company form of organization. Limited liability companies. What do you mean by limited liability? Liability, we know. What is liability? What the business owes to others is liability. Okay. So what do you mean by limited liability? We are using this word so many times, you know. Limited liability companies. What do you mean by limited liability company? If it is limited liability, there should be something called unlimited liability, no? What is limited liability? Anybody? Yeah.
So restricted to certain amount.
Sorry, madam.
Liability of the owners.
Ah,
It's the company in case of debt or anything.
okay.
It is whatever is mentioned in the share or to the value of the share.
Clear or confusing? Yes. Anybody? Anybody from online or anybody from the class? The extent to which the owner owes. Okay. Yeah. Sorry, telling one word. In case of insolvency. If you are insolvent, there is no problem. If you are insolvent, there is a problem. What is insolvency? What is insolvency? Simple terms I want. Clear and specific and simple. We don't have money to pay the debt. That time, who is insolvent? You are insolvent or I am insolvent? Simple. When the value of liability exceeds the value of assets. Simple. We have an equation, no? Asset is always equal to equity plus liability. I told it should always be. Then how this will emerge? There are some time. That is a book value. What you written in the equation is book value. In the balance sheet, your asset value, total of asset value, should always be equal to the total sum of liability and equity. Book value. but we are going to close the business. That time, your assets are sold. Your assets are sold. Your liability need to be paid off, and rest of the amount will go to the remaining amount will go to owner. It may be in excess of the book value of the client in the owner in the business, or it may be short than the book value of the claim of the owner. That's last. But now the liability realizable, the payable, settled to be settled is 2 crore, but the asset realized by the company is only 1.5 crore. 1.5 crore assets are realized. Hot cash is there, 1.5 crore. Business is closed. All assets are realized. Our estimate has been done to realize 1.5 crore. But estimate to be payable is 2 crore. In addition to that, there are some owners sitting there. The owner's claim in the business is always residual in nature. You know the English word, residual in nature. Owner's claim in the business is always residual. That too, especially in company form of organization, it is compulsorily residual in nature. You can't do anything. After all the liabilities are paid off, if anything is left out, that can be given to the owner. It may be in excess of the book value of the client, or it may be sometime lesser. Also, depends upon the situation. Now we come to an example. 1.5 crore is the amount available. 2 crore is the amount payable to the outsiders liability. This company is said to be insolvent. Solvent and insolvent. In chemistry, we have studied solvent. In same logic, but here it is about money, financial position. Okay. So now owners are there, liability is there, and amount available is there. But shortage of 50 lakhs. If it is a limited liability company, the liability holders will have to forego 50 lakhs in the business. They will get only 1.5 lakhs. I mean 1.5 crore. Okay. Instead of 2 crores, they'll get only 1.5 crore. 2:1.5. Suppose I was the creditor of that company. I were the creditor of that company. I have given 2 lakhs. I will get back only 1,50,000. If this is the arrangement in the business, that business organization can be called as limited liability company or limited liability partnership. So what will happen to the 50,000 what I gave to the company? I can't get it back. I should not ask. If it is not a limited liability organization, if it's not a limited liability company, then the owners will be called by the creditors to get money from their private asset, private estate, private resources, and to give to the business. The business in turn will give to the creditors. That's called unlimited liability organization. Sole trading organization is always unlimited organization, unlimited liability organization. Partnership is also always unlimited liability organization. Partnership. Okay. But to avoid this risk, this is a risk of doing business. Since I want to do some business, I am bringing my private asset also. But there is a logic. When there was a profit, you are only taking it. When there is a loss, you have to bring it back. That's the logic. But to give a protection to the entrepreneur, protection to the businessman, company opportunity of limited liability opportunity. If you want to register your company, then your company is going to excuse me. Those who are online, please mute your mic. He's keenly attending the program, right? Our voice also will be, I mean, they also hear our voice now. That will be a disturbance for them. How do we stop that? We can't stop. If we stop that, it will be for everybody. That we cannot. But come back to this. Please, I request all of you, those who are online, mute your mic. If you have some important work to take care of your family, please keep away from the system. Yeah, thank you. Now come back. So limited liability and unlimited liabilities. Companies are always limited liability. Companies are always limited liability. If you are registering your company in Companies Act 2013, then your business becomes limited liability. So if you want to start a business, it is better to start in limited liability form so that your private assets are not disturbed at the time you fail in the business effort. Okay, but there are some cost for this. You can't enjoy this status of limited liability at ease. You have to pay some cost for this. What is that cost? You have to follow certain cumbersome procedures. You can't just start a business in the form of company, form of organization. I already told you there are two documents that are required for starting a company, form of business organization. What are they? Memorandum and article. And starting is not that easy. You have to prepare these two documents, file with the registrar of companies, and you have to follow the procedures given by them. Then you will be incorporated. And again, every year they will be watching you. Every moment they will be watching you. That is the cost what you are paying for the enjoyment of this limited liability status. Meaning, you are always watched. Your each and every step is being accountable. They are giving you what to be done in the form of accounting, in the form of reporting, in the form of preparing a financial statement. Basic accounting is same for everybody. But in addition to that, they need certain kind of clarity. They need certain kind of procedures to be followed by you so that you will not simply say that my assets are not sufficient enough to pay off my liabilities. Then you will give some insolvency petition and you will become out of that company. Then you'll start one more company. That may become a business model itself. You start a company, see the creditors, and you start another company. Like that, you can go on. So that is not encourageable. In the true sense, they are trying to give you some protection. Business is separate, owner is separate. That legal entity concept is there in company form of organizations. Okay, that's what limited liability company. So we are talking about only limited liability companies. So we are going to analyze the data by using some tools and techniques. One of the basic ratio analysis. We are going to discuss that in the class to come. Ratio analysis. We are trying to fix the relationship between one variable with another accounting variable, related to accounting variable. Suppose sales and profit. Okay, don't worry about that now. We are going to discuss that in a separate class. One unit is there, ratio analysis. Just I'm telling you some introduction. We are going to analyze the financial data, which we can get it from these two financial statements. That statements can be found from annual report of that respective company. It is compulsory for all limited liability companies to prepare these statements and to produce to the shareholders. If it is a public limited company, it should be available in the public domain. Okay. So we are analyzing the financial information or financial data, and then in the analysis, we are getting some data, we are getting some insights. We're analyzing, we are getting some insights that we are interpreting. We're getting some answer. That answer you are trying to interpret. Okay. Say for example, for a normal human being, the blood pressure level, heartbeat level, we have some standards, right? We're checking a patient. What is the reading from him? We're comparing that reading with the standard. Then we are giving some interpretation. The doctor is giving some interpretation. Your BP level is high. You're having high BP. So you have to take some measure for this. Likewise, you as an analyst, analyzing and giving some interpretation, and that interpretation is communicated to the concerned company to take corrective actions. Clear? So this is about the entire flow chart of accounting again. Okay. Identifying the business transactions, recording the business transactions in proper books of accounts, classifying the business transactions and summarizing them in order to find out the result of the business. Result can be found out in two stages. Two form. One is result about the performance. One is result about the position. A company may perform better. Sir, this year my profit is 1 crore. Very good. Okay. But what is your current position? Sir, I have only less cash in hand. Some companies will be there, wealth enough, but they don't have any liquid cash. Liquid cash. That will be a problem. Okay. That can be analyzed here, and that is going to be interpreted and communicated to the concerned people. Okay. It's not only for owner. Please understand. The communicating the accounting data is not only for the owners. Communicating is not only for the owners. It can be for all the stakeholders. Okay. So this is what going to take place in the accounting process. Up to one second. Up to this, up to finding out the profit and loss and preparation of balance sheet, we call academically financial accounting. There is nothing called financial accounting or management accounting or cost accounting in real life. These three things will be together. Okay. But in academics, we talk like this: classification of accounting up to preparation of balance sheet. From the stage of recording or before that stage, there is one stage called identifying the business transaction. Up to from that, up to finalizing the statement, we call it as financial accounting. This part is there now. This part, analyzing, interpreting, and communicating to the stakeholder of the company, stakeholder of the business. That is called management accounting. In academically, we call management accounting. Why do we call management accounting? That's fully about information input supplied to management to take any decisions. It is not compulsory. Accountant cannot say, "Sir, your liquidity position is very bad. Please take loan or something." We can't say anything. We say, what is the problem? What is the position? The doctor will say, "This is the problem. If you go for operation, you'll get okay." That is the decision of the patient. Go it or not. Okay. So that is called management accounting. And one more classification of accounting is that is cost accounting. What is cost accounting? Any mechanism or any kind of process that helps to identify the cost of product or service and to have a control over the cost of product or service. Two things: ascertaining the cost, another one is controlling the cost. We discussed that in the last chapter called cost accounting. You keep in mind now, there are three classifications of accounting in academics. One is financial accounting, second one is management accounting, third one is cost accounting. Financial accounting aims at finding out the financial result of the business. Management accounting aims at providing some input to the management to take some managerial decisions. Cost accounting aims at ascertain the cost as well as to control the cost. The mechanism for ascertaining means computing, calculating, estimating the cost, and also to have some process to control. Okay. First, we will study about financial accounting, then we'll go for management accounting, the last cost accounting. Is that clear? Yes. Right. Yeah, please. Yeah, somebody was asking. No. In between these two, there is a preparation of financial statement, right? Summarizing includes preparation of financial statement also. Just summarizing will take place initially in the ledger. How much rent, how much salary, how much sales, how much purchase, that take place in ledger. Ledger is inputted in trial balance. The summary of ledger, the output of ledger is going to be there in the trial balance. That's also a summary only. Summary of all accounts. Ledger summarizes individual accounts. That is brought into trial balance. The trial balance summarizing all the accounts. Okay, it's depicting the summary of all ledger accounts. That is used to find out profit or loss as well as the financial position by preparing that equation, not in an equation format, but in a statement format. In summarizing, or you can say just after summarizing. That two statements are going to be helpful for taking data to analyze. And the result of the analysis will help us to interpret that we are communicating to the stakeholders. Who may be the stakeholders? Investor is if you say investor, then one group of stakeholder is over, no? Who is investor? Investor is a very broad term, right? Individually, who may be the stakeholder? The investor is nothing but one of the group of investor is shareholder. Okay, one of the stakeholder, one of the person who is in need of the accounting information to be communicated is shareholder. In the case of company form of organization. In case of non-company form of organization, the owners. Just owners. Okay, next. Brokers. Why do you want to give to who is broker? This Saadi.com that you are telling? Not that broker. Then which broker? Share broker. He means broker means share broker. Okay, share broker is not a stakeholder of the company. SB? Foreign portfolio. You are telling so many high. Yeah, individually only, but in all companies there will be a FBI, foreign, FPI. In all the companies, not necessarily to be. We just study about India. Yes, yeah. Employees, shareholders, then employees. Employees are very important stakeholder, no? Why do you ignore yourself? Employees, shareholders or owners. If it is a non-company, it's owner, sole proprietorship, partnership, owners. Okay. Government. Government. See, always in India, government is always looking at you. Okay, they'll sometimes take you to Assam, they'll bring back, they'll change the government. So government is very important. Government, how much you are earning for GST? Okay, any T in future, whatever comes, any T for that purpose, government is interested in the business. They want to know what is happening in the company through the accounting information. Okay, government, not only for tax, but also for other purposes, controlling, regulating, to have a peace in the economy. Okay, right. Anything else? 3 we discussed now. Sir? Client. Who is client? 1 second. Who is client? Customer. Customer, we can say customer. Customer. You're talking about customer, right? Client means customer or something else? Business? Who is business partners? Business partner. Who is business partner? Decode it. Yeah. What they do really with you? Suppliers. Supplier in your language it can be a business partner, but in accounting we call them separately suppliers. Supply vendors. Vendors, suppliers interchangeably can be used. Okay. Customers, suppliers or vendors, statutory bodies. Okay. Auditors. Okay. Stock exchange. Yeah, stock exchange. That's what regulating bodies. Yeah. Stock exchange is the first line of regulating agency in India. Somebody told us SEBI, Securities and Exchange Board of India is there in India to regulate capital market in India. You know what is capital market? We take money from the people. No, just I start a company, I take money from everybody. And one fine morning, I'll tell my company is insolvent. Please don't ask any money. We are going for insolvency. That's all. If you do so, it will disturb the economy. Nobody will invest in the companies thereafter. Okay. So to stop this or to regulate this, government has some authorities. Securities and Exchange Board of India is in India to regulate capital market. So they are also in need of your information. But they don't always interfere in your company. They give that power to stock exchanges. Stock exchange will take care of the things what is happening in the companies. Every year, your annual report to be submitted to the exchange where you register, where you listed your company. Through that is taking place in a broader sense. SEBI, yes, yeah, yes. It's for everybody. It's a listed company means if it is a listed company, it's a public document. If it's a listed company, that's the last one. I'll add potential investor. Anybody, I'm not investor in a company. I'm not a shareholder in a company, but I'm having a right to get your report and read. In what manner? You are a public limited company. At any point in time, I may become your shareholders. For that reason, no, shareholders. So that reason, I need your annual report. Okay. Who else? Students, research scholars, academicians also may be interested in getting the information communicated to us. Why? We need some project to be done. We need to analyze something. We need to have some assignment. All those purposes. Or we are really interested in analyzing the company's financial performance and to communicate to the society. Everybody may not be expert like you. So we are doing that analysis. We are communicating to the laymen. That could be possible. Who is end user? Using at the end. Who? We already discussed now. Customer. You have a lot of terminology. End user, client, business partners. Okay, no problem. Customers. This is an important question. Users of accounting information. We classify these all groups into two: internal users and external users. Okay, we can come across again First one, the owner or the shareholder. Second one, employees, customers. Okay. And then creditors. We did not discuss creditors or financiers. Okay. Another one is statutory bodies, regulating authorities, or you can call statutory bodies. Okay. Potential investor, government, accounting firms. Sir was telling auditor, nothing but accounting firms may be interested in your accounting information. Okay. Who else? Government. Government. Stock exchange comes under the regulating bodies. Regulating bodies. Research. Researchers. That academicians, researchers, students, one group. Okay. So consultancy, consultant or consulting firm, accounting and consulting firm. You can include in that. Suppose there is a company, they need your information, but they will not normally get your information. They will get your information on your request. You are going there, E and Y, you are going there. Sir, I have this business problem. Can you please give some consultancy? That time they need your information. Of course, true. So you can take it in that accounting firms and accounting and consulting firms can be one category. Yeah, accounting firm. Accounting firm is nothing but auditing firm. Vendor separately, supplier, vendor, suppliers, etc. That's one group. Okay, clear? So this is one question, theory question. Somebody asked theory question. No? This is one theory question. Who are all maybe interested in accounting information? Or I may ask a question. List out and explain the various parties for getting the accounting information from a company, or users of accounting information. Users of accounting information. Internal users, external users. Management, board of directors, management themselves. They need the accounting data for looking at their own performance. All right. So these are all the various parties involved in using the accounting information. Okay. So this the next one, identification. This is already done, right? Accounting cycle we already discussed in the last class. Preparation of books of original entry, ledger, trial balance, then preparation of financial statements or final accounts. Okay, that being communicated. Look at this. This slide says this. What are the points we discussed so far? Internal users of accounting information, board of directors. If in the case of partnership firm, okay, then managers and other officers in the business organization. External users, investors. Investors includes shareholders. Another one we did not discuss, that is debenture holders. What is debenture? Loan we are giving to the company by taking some document, by taking some writings. Bond, we call in international level, we'll call it as bond. In India, we call it as debentures. Okay, debenture holders and shareholders. Shareholders are the owner of the company. Debenture holders are lenders of the company. Lender, financier, creditor of the company. So they are also interested in your company's accounting information to be communicated. Then supplier, he told, vendor. Okay, vendor, supplier, government agencies. Okay, and then customers, end users, or the clients. Okay, so this need to be elaborately written. Suppose it is asked for 10 marker, please write it. Elaborately write it. Just a few days back, we corrected the papers of your seniors. They just list out this. If they list out this, how much mark I can give for 10 marks? 5 marks. If you are a teacher generous enough, you will give, but all teachers are not generous enough. They are little, when you say they won't give mark. You have to elaborate it. You have to elaborately write it. 10 marker means at least 5 points with explanation. Please listen. Okay? Side by side, the exam. That's also important, right? So please explain this in detail, at least with 1 paragraph or 1 point. Sir, I don't have time. 5 points. Explain with 1 paragraph, each paragraph. 5 paragraphs are there. List out these in the beginning. You will get some 9 mark or 8 mark. Okay. So this is one important aspect what you have to understand from the particular point. Yeah. Next. Meaning of accounting. If it is asked in 2 mark is not there, 5 mark is there for us. But anyway, we should know what is accounting, right? Whatever we discussed so far, you just to put it in a sentence that becomes the meaning of accounting. Meaning of accounting. Look at this. It's an art of recording the financial transaction, classifying, summarizing the financial transaction in a significant manner. And those transactions need to be in terms of money is worth. Last class when we discussed, no? What is transaction? Any event taking place in the business organization which involves transfer of money or money's worth. Okay, those transactions only need to be recorded. Why should we record? To know the result of the business and interpreting the result. Okay, so this is the meaning of financial accounting or simply accounting. Okay, just one word. This accounting, the present today, what we are using as accounting has been evolved in 14th century in Italy. So there was a gentleman called Luca Pacioli. He was a person who has propounded this concept, what we are using till today, called double entry bookkeeping system. We discussed that a little later, but just to keep in mind, evolution took place in Italy. Okay. Yeah. If it is so, what is the objective of accounting? I already told you the last class. The two important objective I told you. One is ascertaining the result of the business. That is nothing but to know the profit or loss. Another one is to ascertain the financial position. To have these two, to achieve these two objectives, we have some ancillary objectives. Without recording the transaction, we cannot ascertain the result of the business. Okay, and then after knowing these two, after knowing the financial position as well as the financial performance of the business, we need to communicate that to the needy people to take some rational decision, and also to know the solvency of the position. By having the third objective, you can achieve the fifth objective. If you know the financial position, you can easily understand whether the company is solvent or not. Okay. Objective of this is also another important question. Objective of financial accounting, 5 marker. Okay. Okay. Now we are coming to the bookkeeping. That means making of journal and subsidiary book. So before we make a journal, what is subsidiary book? I told you when there is a need to make subsidiary books. When there is a need to make a subsidiary book, if number of transactions are huge in number, okay, more in number, that time the company may prefer to make subsidiary books of accounting. Okay, otherwise they will go with journal. Okay. Now we can directly enter into the preparation of journal. Okay. Later you can just go through this material. I just share another document. Don't worry, there are so many files are there. Just have a glance all these things, then you concentrate only on what we are discussing in the class. Okay. Okay. I'm sure I'm sharing the another slide. I mean, file. Is it visible for you online? I hope it is visible.
Yes, sir.
Yes, sir.
Right.
Yes, sir.
So we are coming to the recording of business transactions. Okay, we forget about subsidiary books. We just take journal. Okay. In journal, we are recording the business transactions in a chronological order by following some accounting principles. What are those principles? Quickly, I'll tell you. Double entry bookkeeping system is very important aspect among all the principles. Dual aspect concept. So what do you mean by dual aspect concept? What is double entry bookkeeping? Bookkeeping means making the books of account. That's it. Okay. How do we make? Follow some rules and regulations. One of the important rules is double entry bookkeeping system or dual aspect system. Dual aspect. What do you mean dual aspect? Each and every transaction that take place in the business will have two aspects in it. Example, one transaction, it will be. That is a transaction. What related to transaction? Bank transaction. What is bank transaction? Today I am going to SBI, where my friend is working to see him. Okay. I'm coming back. Is it a business? Is it bank transaction? What is taking place in bank only now? Deposited money into bank is a transaction. Transaction. First of all, bought goods from whom? Raw material suppliers. There are infinity number of raw material suppliers in the world. Some XYZ company. Okay. Always teachers are using X, Y, and Z. You're also using. Okay, no problem. Okay. Purchase of raw material from XYZ company limited. How much, sir? 1 lakh. You paid it or not? Going to be paid later. If X is there, you will pay. Right. So this is called transaction. Purchase of raw material for my business organization. Billed worth of 1 lakh from XYZ company limited without paying money today. They raised an invoice on us for 1 lakh rupees. That's it. That's it. It's a transaction. Okay. Now I claimed that, or the double entry bookkeeping system claims that, or propounds that each and every transaction has two aspects into a twofold effect into the transaction. In this transaction, bank, I deposited money into my bank account. Okay. In this, goods purchased from supplier. Okay. Simple. What is the two aspect in this? I have promised my supplier I'll give you back after 2 months. That's one aspect into it. Another aspect, we are physically getting the custody of the goods. We are the custodian of the goods now. It is delivered to us, or it is going to be delivered. Now, if it is billed on you and it is landed in the lorry or in transport, immediately you are the owner of that product. Okay. Of course, who is going to deliver, who is going to pay insurance, that are terms of trade. That we don't confuse now. We ordered a goods, we got it. Okay. We received goods and we have promised to pay money later, or we paid money. If it's another transaction, we paid money. In both cases, there are two aspects in this particular transaction. Money goes out or money is going to go out. Promise has been raised. Okay, receive the material. In this case, money from my cash box is going to bank of mine, in bank account of mine. And another one is my bank balance has increased. My cash balance reduced, my bank balance increased. You take any, are you agreeing these two aspects into these two transactions? You take any transaction like this, one or two. Salary paid. Salary paid. What are the two aspects into it? You have enjoyed the service of the employee and you have lost your resources of some money. Salary paid. You have enjoyed 1 month of work of your employee, service of your employee, and you have given your money. The bank balance or cash balance has come down. Anything else? One more. Last. Payment to customer. Payment to customer. Why you pay customer? He is a good businessman. I want to become his customer. I want to become customer of his business. I'll go and enjoy some benefit, and I'll also paid for that. I'll also be paid for it. But we don't pay. Sometimes emotionally he's paying. Okay. Good customer. Okay. Receipt from customer. Receipt from customer is possible. Okay. You have given goods. You have lost your goods in the benefit of your customer, and you have received some money. Cash balance or bank balance increased, or the promise from the customer has increased, and your goods are gone out. Or in the second case, you are receiving money from your customer. Okay, your debtor comes down, amount receivable from debtor will come down. The cash balance will go up at the time of receiving money from the customer, right? So you take any example for this matter, all those transactions have twofold effect. Both the aspects need to be recorded in the books of accounts. If you do so, that is called a double entry bookkeeping system, double entry system of bookkeeping. If you record only one aspect of it, that's called single entry. Nobody follows that, so we forget it. Okay. So double entry bookkeeping system we are going to follow to record journal entries. Okay. Okay. This equation already studied, no? Assets equal to liability plus equity plus capital, or equity plus liability. Okay. We directly come to the journal. Right. Okay. So this double entry bookkeeping system classifies the entire heads of account into personal account, impersonal account. Okay, I stop here for 1 minute. Why we do all these things? Finally, we need two things. What are the things? Profit and loss account, and in balance sheet, I will write building 5 crore. How do I get that 5 crore? For that only we are working on these things. Please understand. Finally, we are going to report to our stakeholders through these two statements about our financial position, about our financial performance. In that, we are going to tell them land and building 5 crore, machine worth rupees 2 crore, okay, furniture worth rupees 50 lakhs. These kind of thing we are going to report. Our sales in the entire year made by the company is 5 crore. Purchase made is 3 crore. Okay, commission paid, salary paid, rent paid. All these things we are going to report in these two statements. These two statements cannot be reported simply by keeping all these things in your mind, and you cannot write in the statement. In order to make that entry in the books of accounts, we are doing this. Please keep in mind. Okay. So these are all internal things happening in the business. This cannot be revealed to anybody. You cannot go and ask, I am the owner of this company, I am the shareholder of the company, please give me the ledger. No right is there for you to take a ledger, to take a journal, to take a subsidiary books. You have right only to take two documents. Okay, right. So to make the journal, we have to follow this double entry bookkeeping rule. They will call golden rules of accounting, or rules of double entry bookkeeping, basic rules of accounting. Okay, this rule is based on the classification of the account into two types. One is personal account, another one is impersonal account. Whatever you do in business, that should come under any one of these two categories. Rent paid, you told, no? Rent paid. I mean, goods purchased from the supplier, XYZ Limited Company. Goods purchased, raw material purchased. XYZ Company Limited is a person or imperson? Person. Artificial person. XYZ Limited is having a entity. It was created by whom? Created by law. How? Through the register of companies. Okay, so it's imperson. Ravi, Rajesh, Uma, or Sona, all these people are natural persons. Anything you deal with these kind of natural persons, representative persons, and real persons, I mean artificial persons, these three will be grouped into one category called personal account. Any transaction deals with natural, artificial, representative person is called as personal account. Personal account. Okay. Other than these three, everything is called impersonal. Impersonal. What could be impersonal? Income, expenditure, okay, asset. These all can be impersonal. Look at this rule. Impersonal account can be classified again into two categories: real account and nominal account. Is it visible for all of you, or should I zoom it? Little bit.
It's visible, sir.
Yeah. Yes, madam. made it little. Control and that option is not working here. No, I have gone to some other place. Which one? Which one, sir? Can you come and please do that? I'm so sorry. Control? Control 1. Yes, sir, it worked. Make it little bit zoomed one. Everybody can see. Okay, so two type of accounts: personal account and impersonal account. Impersonal account one is nominal, another one is real. Okay, nominal and real. Little more possible? Yes, sir. Thank you, sir. Because this is very important. You have to know this. Otherwise, you can't generalize. We keep 10 mark for journal in the exam. 10 mark journal, one question. Okay. So how do I journal? How do I journal it? How do I generalize it? By following this principle. Okay. What is the principle here? Debit the receiver. Debit the receiver. Credit the giver. If it is about personal account, just to keep in mind, I'll explain to you while taking the journal in another 2 minutes. Okay. Next one is, if it is a real account, debit what comes in, credit what goes out. Okay. These debit credits are nothing but plus minus. That's all. In your mathematics, just keep in that way. Plus minus. That's all. Okay. Then in the nominal account, if the transaction is about nominal account, if the account affected is of nominal account, then you have to follow this rule called debit all expenses and losses, credit all income and gains. This is basic. If you just follow the opposite of this also, you'll get perfectly same answer what a person is following the same thing. So this is only for a arrangement to get the result. That's all. All expenses are added together, all incomes are added together, compared with each other. The result is going to be profit or loss. That's it. Okay. So I again repeated the rule, the golden rule of accounting. We have to first classify the account into 3 categories. Basically 2. The second is going to be subdivided into 2. Personal, impersonal. Impersonal is again divided into 2. Nominal and real. Okay. So there are 3 rules. Personal account rule, nominal account rule, real account rule. Personal account rule says that debit the receiver, credit the giver. Nominal account rule says that debit all expenses and losses, credit all income and gains. The third rule, real account rule, says that debit what comes in, credit what goes out. That's all. Accounting is based on these 3 rules only. Okay. Now come to the journal format, how it is going to be. So there are some transactions given here. Okay. We try to record this in the journal by knowing the format of journal. Okay. Yeah. This is the format of journal. Look at this. The format of journal. You may wonder, sir, in my company, nothing is there like this. May not be. Okay. But basic aspect you have to understand. So we are teaching this. Okay. In electronic format, it may be there. Okay. In a different version of this. Okay. But book, you have to write in this way only. First column is in the journal is date, particulars. Second column. Third column is ledger folio number. You remember we discussed already. The journal entries need to be posted in the ledger to summarize it, to group it. Okay. So which page of the ledger book, those days book only, no manual book. Which page of the ledger book this particular transaction is going to be recorded? That page number should be recorded here. But academically, we don't have that connection. So we just ignore it blank. We keep this column always blank. Ledger folio number. Actually speak ledger folio number, the page number of the ledger book, where the account of this particular is going to be entered in. Easy referencing. Okay. So you forget about this. Don't write anything on this. You write empty. You will keep empty. Then amount. Debit amount, credit amount. Okay. This is called ledger. Ledger is a book of prime entry, original entry. it should be maintained in a chronological order, one after another. Date wise, it should be recorded. Suppose in one particular day, 10 transactions are there, one after another, you have to write. Okay. After preparation of journal. Ledger happens. No. We have page number. No. See, in a ledger, ledger is a card-bound, big, voluminous book those days. Even some people maintain today. We will allocate the pages. First one, page number 1 to 10, cash. 11 to 20, salary. Something like that we allot. Though number only, page number of the ledger will come here. Okay, it's not after preparing ledger, you will copy that number here. We allocate some page number from one page to another page for a set particular account. That account will come here. Right. Next, amount you have to write it here. Debited means here, credited means here. So again, each and every debit will have its own corresponding credit. Why? Debit the receiver, credit the giver. Double entry. Two aspects are entered. For one particular transaction, two aspects are there. Both the aspects are recorded in the books of account. That is why it is always equal. Now you understand, we call tallying, right? Your friends are, you might be listening to your friends. They will tell, my accounts are not tallied. What tallying means what? The debit balance should always be equal to credit balance. Okay, if it is not, there is some mistake. Okay, so that is called tallying. Okay, fine. Now, can you prepare this? Yeah. All of you take this format. Look at this. This is a way of writing a journal entry. Date, particulars, and I have written some explanation for this entry. This is called entry. This is called journal entry. What is this entry for? I have written that small explanation. This is called narration in accounting. Narration. I narrate what it is in some simple words. Then amount is written here. Debit is always written here and credit is not written. See, DR means debit. Don't ask me, sir, DR means how it can be debit. It should be DT. Then we are writing DR. We don't know. DR we have to write. Debtor. Okay. Bank account debtor to Mohan account. Mohan account. That should be AC. A bar C means account. This is the way in which you have to write the journal entry. Okay, can you guess what is this entry for? Yeah, amount received from Mohan in our bank account directly. Mohan has paid directly into our account. Okay. Received money from Mohan, who is our customer, directly into our bank account. That's a transaction. Okay, let us take the transaction, analyze it, and try to find out how this entry has come. Mohan is a customer, is depositing 14,50,000 rupees in our bank account directly. Okay, what is happening? Our bank balance increases. Who is receiving the money? Bank. Bank is a real, nominal, or personal? Real, nominal. One more is there. Tell me that answer. What is that? Personal. That is correct. That is correct actually. Bank is a personal account. Why bank is a personal account? It's an artificial person. Bank, college, university, any business organization, BBMP or kind of any municipal authorities. Okay, anybody like that is called artificial person. Bank is an artificial person. What is the personal account rule says? Debit the receiver. So who is receiving? So we debited the bank. Bank account debit. Debit the receiver means we are debiting the bank. Bank account debit. Bank account debit. How much is received? 14,50,000. Okay. Then who is giving? Mohan is a personal or real or nominal? No doubt personal. So personal account says credit the giver. So who is giving? Mohan is giving. So to Mohan. I don't write CR here, credit here. Instead of that, I'll write small space, I leave it and I'll write to Mohan account. How much? 14,50,000. Within bracket, I will write being money directly deposited by Mohan in the bank account. Suppose you have 2-3 bank account, you write the name of the bank also. Sir, in SBI I have one current account, ICICI I have one current account. That time confusion arises. Which bank Mohan deposited money in our account? You have to ask him, he will send a message. You have to give him a receipt. Okay, so in that we'll know which bank account. So we have to write ICICI bank account debit. Yeah, it is from Mohan, yes. Why it is written to Mohan here? Bank account was debited to Mohan. Mohan has given the money in the bank, so we debit. See, by to, English meaning the by to will not work out here. By is actually here. We did not write here. Actually, there is a by. By by is there in the first one. Debit. Debit is always by. Credit is always to. Why it was debited? Because of Mohan giving to you. Okay. While talking, we say credit. I mean, Mohan, money has been received from Mohan, or money has been deposited by Mohan. In that way, it is okay. But here we'll write like this only. Okay. Debit is always by. Credit is always to. You'll come to know this when we're preparing a ledger. If suppose you prepare a Mohan's ledger, we have to write this amount in the credit side of Mohan. If you prepare a Mohan's ledger account, we have to write this amount in the credit side of Mohan. By writing what? By bank account. By bank account, 14,50,000. Okay. Slowly you'll understand this. Don't confuse this by and to from the English usage. Debit, credit. Credit we are writing to, the word to. Okay. So Mohan's account, sorry, bank account debit to Mohan's account. I am writing explanation. Being money credited by Mohan directly in our bank account, in the bank account. If you have two bank accounts, write the bank name itself. Suppose in one single bank I have two accounts. Possibility. ICICI bank I have two accounts, two current accounts. How do you do that time? I will write the bank account number itself. ICICI bank account within bracket, the account number. Debit to Mohan account. That's all. Okay. So this is one simple example of writing a journal. Okay. Any doubt in this? At least it is in the way of you are trying to understand, like that it is there. Okay. Look at this. What could be the transaction here? The owner brings money and directly depositing in the business bank account. Okay, that's a transaction. Suppose I am the owner. I am bringing money from my personal resources to the business. Meaning capital introduced by the owner and the money directly invested in bank. Anybody can deposit money in anybody's bank account. You know that, no? Anybody can deposit money into anybody else's bank account by providing your PAN number. By providing your PAN number, if it is more than 50,000, 49,999. Okay, right. Right. So that concept is there. So I just directly, I want to become a partner in your company, in your partnership. I was asked by you to deposit money in the bank. I deposited. Okay. So what's happening? Who is receiving the money? Bank. So bank account debit. To who is giving? Mohan or Rajesh or the name of the owner. Now, the name of the owner, if you write Mohan's account, Mohan only introducing the business money. Okay, Mohan's account. If you write Mohan account, what's the confusion? Later will happen. So that is one thing. Another thing is there may be so many Mohans. One supplier may be a Mohan, one customer may be a Mohan. One reason. Another reason is Mohan is not just a person. Mohan is a person. But Mohan is not a just a person. What is the meaning of just a person here? He is one of the owners of the business, or he is one owner of the business. Sole proprietorship. So owner's money, when it is brought in or when it is taken out, it should be referred in the name of capital. Suppose there are more owners, more than one owners. That time you can mention here whose amount it is. Mohan's capital account. Please understand, Mohan account is different from Mohan's capital account. Each and every letter in the name of the account matters. Okay. Mohan's account is a personal account, just a personal account. Capital account is also personal account only, but personal account relating to the owner. Capital account. Please understand. Okay, capital account. Two owners are there. Name takes much importance. A is capital account, B is capital account. Instead of just a capital account. Okay, I'll give a transaction. B and C brought 1 lakh rupee each to start a business. What is journal entry now? I did not tell that the deposit in bank. Huh? Cash account debit how much? 2 lakhs. 2 A is capital account 1 lakh. 2 B is capital account 1 lakh. This is called compound entry. 2 entries. Cash account debit 1 lakh. 2 A is capital account 1 lakh. Cash account debit 1 lakh. B is capital account 1 lakh. Being capital introduced by A, being capital introduced by B. It is called simple entry. Simple. Another one is compound entry. One debit will be there, more than one credit. One credit will be there, more than one debit can be there. That entry is called as compound entry. Clear? Okay. Can we take another transaction? Can you tell some transaction? We can record it now. Forget about this. What is there? Yeah. Okay. Before that, I'll clarify one more thing. Suppose if it is two partners, A account, B account. A is capital, B is capital. Suppose 1,000 people are there. In companies, shareholder can be 1 lakh, 2 lakh, 1 crore, 2 crore, maybe. Chances are there. Unlimited shareholder. You know, no. Number of shareholders in a company can be unlimited. Liability of the company members are limited, but number of members in the company is unlimited. If it's a public limited company, minimum 7 members to be there to start. Maximum is not defined, unlimited. So that time what to do? We can write A, B, C up to Z, then A1, A2, A3. Sorry, but real life name will be there. We can take like that. 2 Morgans will be subscribing shares from us. So 2 Morgans account, again, one more 2 Morgans account we can write. No, right? So what to do? If we write 10,000 twos are there, credit 10,000 or 1 lakh, 1 crore, how it is possible? Not possible. Share capital account. We give a sum here. Share capital account 15 crore. Over. What is that 15 crore constituting? We write separate book. That's not accounting book. That's a members register. A, how many shares? How much amount? B, how many shares? How much amount? That separately one register. Register of shareholder will be there. In that, each and every name of the shareholder, his address, his account number, because you have to give back his money, not dividend or anything. His account number, everything will be there. His PAN number, his demat account number, everything will be there. Okay. So if it is a company, cash account debit to share capital account. That's all. Simple. Clear to you? When company started with 1 crore by issuing of share capital means bank account debit or cash account debit to share capital account 1 crore or 2 crore, 3 crore, whatever the amount it may be. Being business started with share capital of this much. Over. Clear? Okay. Now you tell me some transaction. We can try to buying goods. Buying goods for cash. No telegraphic English. Full. Full. Because we have to write the amount here, no? For cash, for rupees 50,000. What's the entry? Buying goods for rupees 50,000 for cash. Purchase account debit to cash account. Why it is purchase account? You can. What is the basic logic? What is coming in? Purchase is coming in. Goods are coming in actually. So actually the goods account is which account out of 3? Personal, real or nominal? Real. Goods. Real account includes what can be seen, what can be touched, what can some existence. Okay. Nominal means for the namesake, we are only naming it. 10,000 rupees you are giving to your landlord. What you will call that 10,000? Rent. 20,000 rupees you are giving to, the bank for your loan. What do you call it? Interest, or it can be EMI, or it can be processing fee, or it can be anything else. Okay, you are only naming it. Political party is coming and asking you some money, you are giving 20,000 rupees. What do you call that? Donation. Same amount, same rupee, it takes in different name. Accountant names that particular head of the account. If that is the case, that is called nominal, namesake, nominal account. Example, rent account, interest account, dividend account, salary account, donation account, all these things. Okay, in that manner, goods account is a real account. According to real account, what's the rule? Debit what comes in? What is coming in? Goods coming in. So goods account debit. 2, what's going out? Cash. Cash real account. Real account says that credit what? Goes out to cash account. Goods account debit to cash account. Good, you can do that. But when you sell it also, goods goes out. That time it is going to be credited. Credit what goes out, no? So confusion, goods account debit, goods account credit, I don't have the logic. Directly I bring a nominal account. When goods are purchased, I label it as purchase account instead of goods account. If you name it as goods account, it's a real account. If you name it as a purchase account, it is a nominal account. Yeah. So purchase account debit to cash account. When you are buying goods that are going to be traded in the business, that are going to be processed in the business, only you have to write purchase account. Suppose you're buying furniture by giving a check of 5,000 rupees. What's the entry? Furniture is an asset. It's not a goods. Please understand, goods also an asset. Goods is a current asset. Furniture is a fixed asset. Accounting term. Otherwise, simple logic, goods are meant for trading. Furniture is meant for using. Okay. So furniture account debit. Why furniture account debit? Real account. Furniture is a real account. Real account rule says furniture account debit what? Comes in. So furniture account debit to bank account. Why bank account? I have paid a check. Money is going to be paid by the bank. So credit the giver. Who has given? Who is going to give? Bank. So furniture account debit to bank account. Little confusing, right? Yeah, it should be. Yeah. Which one? Fourth one. All of you listen here. Purchased goods for cash rupees 4 lakh. The student can see that the required entry is purchase account debit to, it should be cash. Yeah, it should be cash. Or it should be here for a check. Just now we talked about that only. Right. Yeah.
So if you see cash account to bank account.
Yeah.
But cash deposited to bank. If you see the being cash
Out of the above 25,000 is withdrawn. See, withdrawn from the bank.
but below see the
That is wrong. I think this is NCRT book only. There is a mistake. Okay. So don't worry about that. Listen, understand the concept. If you receive money from bank, cash to bank. If you deposit money into the bank, bank to cash. Okay. Some more question we can see. Yeah. Look at this illustration number 4. Point number 1. Shahil introduced capital through bank rupees 4,000. What's the entry? Meaning Shahil is depositing 4,000 rupees into bank for starting a business. Bank account debit to Shahil's capital account or simply capital account. Second one, cash withdrawn from Citibank, rupees 2,000. Cash account debit to Citibank account or simply bank account. Third one, loan of rupees 500 taken from Mr. Y. Loan means what? Cash only. Yeah, check also may be given. Okay.
so cash account debit to
Y is loan account. Y is loan account. Later, there may be one more Y from your business client or supplier. So not to have confusion, we have simply Y is loan account. Cash account debit 500 to Y is loan account, being loan taken from Mr. Y. Clear? Yeah, this gives some good number of transactions. Ajay started business with capital. One second. Can you try, sir? First one. Ajay started business with rupees 4 lakh. What are the two aspects affected here? The business is now started that gets money from whom? The owner. How much? 4 lakhs. Who is giving the money? Ajit, owner gives money. So what's the entry? Can you try? Can you try, sir? Money comes in. Money is cash is which account? Real account. Real account rule says debit what comes in. So what is coming in? Cash coming in. So cash account debit. Cash account debit 4 lakhs to Ajit's capital account 4 lakh. Money received from the owner, Mr. Ajit 4 lakh. Okay. Second one. Ajit, he refers to Ajit. Ajit withdrew cash for business. Cash from business. This book, I think there are a lot of cash withdrawn for personal use from business. Or, okay, I'm sorry. He withdraws money from the bank for the business purpose, rupees 2000. Okay, that's right. Business is withdrawing money from bank. So to the business, money comes or goes? Money comes in. So cash account debit, how much? 2000. From where it is coming in? From bank. So to bank account, 2000 rupees. Money withdrawn. Simple. Money withdrawn means, one second, sir. Money withdrawn means cash to bank. Money deposited means the reverse. Bank to cash. Okay. Yeah, correct. I thought it is mistake, but it is correct only. Okay. Correct. Yeah, even that was the confusing for me also first, but it is very clearly given. He takes money from the business account for business from the bank. Okay, next. Third one is purchased by paying money through bank. So purchase account debit to bank account. Whenever money goes from bank, please credit the bank to bank. Whenever money comes to the bank, debit the bank account debit. Okay. Third one, sorry, fourth one. Fourth one, no. One second, sir. Wait, sir. Others can think. Yeah, please, others. December 8, he sold goods for rupees 16,000 and received payment through bank. Goods are going out, money comes into the bank. So what's the entry? Whenever money comes to the bank, what should we do? Bank should be debited. So bank account debit to sales account. Or simply goods account, right? But we don't follow that. We write sales. Whenever goods are sold, sales account, goods are purchased, purchase account. Please don't confuse these two terms. Whatever purchase is not purchase. Purchase of goods or purchase of any material used in the business for the processing, not for using in the business permanently. Okay. Suppose furniture purchased by Fatima Furniture Limited by spending rupees 2 lakhs. What's the entry? First account debit, not furniture account debit. Okay. Prakash Plastic Limited, the company name. Prakash Plastic Limited purchased furniture for rupees 2 lakh. What's the entry? Furniture account debit to cash. Look at the difference. Fatima Furniture purchases furniture means purchase account debit. Prakash Plastic purchases furniture means furniture account debit. That's the difference. First one talks about revenue expenditure. Second one talks about capital expenditure. Clear? That always in English we say purchase only, sales only. Sale of old furniture for 2,000 rupees cash. What's the entry? Sale of old furniture. What's the entry? Cash to furniture. Fatima Furniture sales furniture for rupees 2 lakhs. What's the entry? Fatima Furniture sales furniture for rupees 2 lakhs. Sales 2 lakhs over. In the previous case, you told cash to furniture, old furniture sold by some normal companies. Their business is something, but they are selling the old furniture. So furniture account to be named at the time when it is called asset. Furniture account should not be referred as an account when it is a inventory, when it is a normal goods. That clarification you should have. Okay. Next, just 2 minutes. We'll take a break. Okay. He sold goods to Aravind. Sold goods to Aravind. Okay, that's right. Understood. What is the entry? Aravind account debit to sales. Why Aravind account is debited? Aravind is a receiver. Credit the, sorry, debit the receiver. Why we debited Aravind? Because we did not receive any money from Aravind. Sir, how do you know that we did not receive money? It is not mentioned any cash. In real life, you can ask the clarification. But here in accounting, classroom or in exam, we have some kind of assumption. We have some kind of common assumption, that is that the word cash is not given. Suppose December 12, the business sold goods to for cash 400 means the entry will differ. What the entry will be? Cash to sales. If it is as it is like this, sold goods to Aravind rupees 2,400 means Aravind to sales. It's only our agreement, only our understanding. In real life, we should see whether Aravind has given the money. That invoice, the credit invoice, and it's a receipt, cash invoice. Yes, on credit, yes. If it is a cash invoice, cash to sales. If it is a credit invoice, party to sales. The party is being here, Aravind. The customer is Aravind. Okay. So with this, we can have a break. Later, we can go with another transactions. Okay. Thank you. See you. Those people are online. We are just going for a break for 10 minutes. After that, you can reassemble. Thank you.